Good morning, folks, and welcome to another episode with Bob Iaccino. Today, we're going to go ahead and talk about how to identify and trade rotation zones for entries and exits as well. Bob, how's it going?
Good. How are you, man?
I'm
That little
doing well.
banter before we went live actually put me in a completely different mood.
You know what? I'll send you my OF link. You can send the payment there. But they're definitely going to edit that part out. But here's a question before we get things going. How much is the
Yeah.
watch on your wrist?
This one, maybe $1,200.
Oh, okay. I was hoping for like 12,000 or something like that. I don't
No,
know.
no, no. I don't wear that one to work. No,
Oh,
I
that's
don't. I
you
don't
don't
have a
wear it to
twelve
work
thousand
where it's
dollar
like
watch.
you're a remote. You could do it if you
I
wanted to.
use. Listen, I think this is actually important to say. I used to own a Rolex and a Panerai. Now I only have a Panerai, but it's like a smaller one. It's more for like weddings or things like that. I don't wear it pretty generally. I have 6 of these Shinola watches.
Hmm.
And I don't know if you know the Shinola story or if anyone here watching does, but basically that company bought the Shinola shoe shine brand name because there was an old saying, you don't know blank from Shinola. That was an old saying, you don't know SH, fill in the rest from Shinola. That was a phrase that was saying, you don't know bad stuff from good stuff. Shinola was a very like highly regarded shoe polish in
Yeah.
like the 20s. These guys bought that name and then hired a bunch of laid off US auto workers and taught them how to make watches with Swiss movements. So
But
that's what these are.
the brands you mentioned, the sayings you mentioned, I'm not familiar with them. And folks watching at
Yeah.
home, either two reasons for it. One, I'm too broke to know, or two, I'm too young to know. Either way, I
This
will.
one is the young. This one is the young thing.
This is
I'll
my
tell you. I'll tell you the Rolex story when we have more
2014.
time.
But
If we
okay.
run out of time today, I'll tell you the Rolex story.
Hello to Antonio and also to Narcisse as well. Okay. Identifying trade rotation zones for entries and exits. Let's dive right into it. You have a chart pulled up, which you're going to need to change here in a moment to a different
Yeah,
ticker. But
I am
what
going
is the
to do that. As
difference
a matter of
between?
fact,
So last time we covered, say, resistance and support. What is the difference between that and the rotation zones that we're going to talk about here today?
let's do the SPY on this one. Okay. So I have all of my stuff on here. I'm going to remove the ones we're not talking about. Okay, which is volume and the percent B. And I'll get rid of these 2 lines because they're from something else. All right. So what we have on this particular daily chart, okay, is a 200 simple moving average, a 50-day exponential, and then a 21-day exponential and an 8-day exponential. You can see them up here, okay,
Mhm.
EMA 8, EMA 21. The rotation zone is formed by these 2, okay, the 8 and the 21. Now, it's not that I use these to look for a cross and get long. I don't. Part of the reason I don't is here is a cross up, here is a cross down, here is a cross up, here is a cross down, here's a cross up, here's, I don't know if that is or isn't, but here's a cross down, here's a cross up, here's a cross down, here's a cross up. This sucks for
Yeah.
trading.
Oh my goodness.
Moving average crosses. And you could do that with pretty much any fast moving averages and find just multiple crosses, and they're just not reliable to trade on the cross. So why was this cross up here different? Well, it was different because it formed a rotation zone. Okay. The rotation zone is when the 8 crosses above the 21 or vice versa. You can see vice versa here where we had a little downtrend there. Okay. And they angle and widen. You see no angling in this area and you see no widening, maybe a slight one here, but there's not much of an angle there. Okay.
Mhm.
There's a sharp angle down here, and the 2 are widening, getting further and further apart. And I can measure those to kind of show you. So, like from here to here, this tool is not going to let me do it, but you can see where I put these particular markers, right? From here to here, there's that much. And if I slide this over, it's no longer touching the bottom one because it's widening, right?
Mhm.
You can see that it's getting wider and wider and wider as it goes down. Same thing's happening here on the upside. You can visually see this without me measuring it.
Mhm.
This is called a rotation zone. So how is a rotation zone used? Well, you can see visually that a new trend started somewhere around April 9th. well, let's call it April 8th. Okay. A new trend started for the SPY, right? For the spider. So what do I do with that? Well, I don't have a signal. I mean, I actually did, but don't worry about that. Let's say I didn't have a signal and I want to get into this one. Where do I get into it? Okay. The rotation zone provides you an area where the market is paused for a second and is basically resting, for lack of a better word, to resume the same trend. Okay. Where do we see that? Well, we see the touch of the 8 here. That's not really a trade for me. This is the closest thing to a new trade, because if I zoom into this, okay, and again, this is imagining that I missed the initial uptrend, which a lot of the times I do. I've told you guys before that if it moves from here to here, I buy here and sell here, right? I'm looking for portions of moves. So here we dipped into the rotation zone, barely, but we did. If I put my cursor here, you can see that the 8 was at 708.88 and the low was at 708.37. The second we dip into the rotation zone, I want to draw a trend line opposite to the current trend, like that. Okay. Now, I call this a best fit trend line. I don't think it needs to be perfect personally. If you're a person who's obsessed with trend lines, you can do them the way that you do them. We did a trend line episode here, which I believe is somewhere in the TradeZero education. But I call it a best fit trend line. I just want to get a general idea of the downtrend within the uptrend. Okay. Then I wait for a close above it. Here's the close above it. Happened on the very next day, April, right? Now it's funny because right here I have another dip into the rotation zone, but number one, I'm already long. Number two, it's not technically a dip because here you've got 714.26 is where the 8 is, and the low is 714.99. So it didn't actually dip, right? So that's where I get entries. There's another one here, okay? I could draw another best fit trend line here. Again, just close enough, that's fine. I get a close above it, I would get long on the close. By the way, sidebar before you ask me any questions, something people ask me all the time, when you say long at the close, are you literally sitting there at the close? Sometimes I am, not always, right? Sometimes I look later in the day and I go, okay, I got to get in as close to the closing price as I can, which if you look at the very next day, you got an opportunity to, because it actually dipped below that close. That's not always the case, right? Like, for example, here's the close here. You would have had to wait till 2 days later to get at that same price. But honestly, if I missed this close, I would have bought this open and been okay with it.
One thing that terrifies me about rotation zones is how far up the price may be when it is angling, I think is what you call it, right? So for example, in that first example, that mid-April that you were talking about, like it is a little bit higher away from the moving average itself. And probably the reason that it scares me is because I'm taking too much share size and therefore my stop loss is much bigger than I personally would like. And then you will say, well, take a smaller share size. And I will say, well, then I'm too impatient to wait 26 days for money. I'll go see a therapist, I promise. But that's the kind of thing where it's like, okay, I've had to wait 3 days because EMAs and SMAs are all lagging, right? You know that. I know that. We've talked about it before.
Which is why I don't enter on the EMA, right? I enter on the break of this little trend line.
Yeah. So your first entry would have been that trend line break, not mid-April.
What, this one?
Yeah, that's where your first entry would have been from this chart?
My first entry would have been here, yeah.
Okay.
This didn't provide me with a downward sloping trend line, this little move here. We didn't get into the rotation zone until right here, and technically we didn't get into it because 702.15 is where the 8 is here and 702.28 is the low. So this didn't even get into the rotation zone. So it's not really an entry for me. And again, a wick is enough, right? It might be clearer to show you on the down trade, but let me just finish this. So for example, I got long here. What's my target, right?
Yeah.
Well, I've showed you guys before, and this is sort of a new series, but I use trend-based fib extensions, okay? I use GAN, but it's fine. So when you're looking for an upside target that hasn't happened yet, right? Because theoretically, I can't get rid of it until I delete it, or I don't know how. Theoretically, the chart would have looked like this when I got in, right? So I have no idea what's happening up here. Now, could you just compress the chart and look for a level? No, because we're at new highs, right? So you need somewhere to figure out where a level is going to land. So if I take this fib and I go from the most recent cycle low, which is here, to the most recent high, which is here, to the most recent low, which is down there. Now you'll notice that mine are Gann trend lines, but that's okay. The fibs work almost as well. They just give you slightly different levels. Okay. I'm long here. Okay. The very first level here, well, we've already reached it. The next level here is where I move my stop, where I tighten my stop up. Okay. And then the third level here is where I exit. And that's that. The trade is over. Okay. Now I do a similar thing for my stops. I just measure this the opposite way, right? I go to, so here's the pattern, right? So because I'm looking for a downside, right? I want to go up, down, up, and then it'll project down to the lows, right? So it's going to allow me to go here, here, and here. Those are the only areas that are available when I got long here. There's nothing else. And this is the most recent cycle high. It's most recent low. And there's that. I have to zoom in to tell you where my stop is going to be on that, right? I have to extend this chart. Okay. I'm long here. My stop is going to be the very first 62.5 from this retracement, which is right here. Okay. So it never came anywhere near my stop. Now that doesn't mean that you won't get stopped out of some of these. You will, right? But the other thing I like is that this 62.5, which again, it's right here. It's the red one. It's right here. And my stop's going to be slightly below that because I never want to be right on the line. That's also going to put me below the 21, which is when the rotation zone starts to break down.
Yeah.
So I've got stops and I've got targets, and it's perfect for the way I do it. Do you want to do it here again?
Well, so let me ask you this. Right now you're on the daily. What different time frames would you suggest for day traders and for very short-term swing traders? They also can take a look at, different time frames, but like where would you suggest? Is it the 15? Is it the 30? Never go at the 5? What are your thoughts there?
I mean, if you're talking about me, you're talking about an hour, but rotation zones develop an hourly chart, but rotation zones develop everywhere, right? So here's an hour. You know what? Let's just go to a 30. I'll just do a 30, break my own sort of rules here and go to a 30. And let's just pick any of these parts of that. You know what? Let's do the downtrend on that. Does that work for you?
Sure.
Okay. So that people like to look at shorts. So we'll look at shorts here. And I want to stretch the chart enough so they're clear. All right. Here we get a pronounced down move. I'm going to temporarily get rid of the 50 so it's out of my way. Here we get a cross and a pronounced down move where we get the angle and the widening, right? You can see it pretty clearly here. Here's the first time that we go into the rotation zone. My trend line's tiny, but it's the same amount of bars as I showed you on the last long, right? The trend line is here. And again, it's a best fit, right? Here's the first close below. So that would be my short. Now, a lot of people would be like, whoa, I mean, that is way off from that trend line. Yeah, it is. But then look what happens. Now you can front run if you want to. You guys know that I don't. It can also be argued that the same bar that went into the R zone closed below it.
Yeah.
But I think that's kind of a judgment call. There are some platforms where you can measure the actual point of the trend line depending on where you're at. The way that I've always done it is visually. I've said if it goes through the midpoint, here's the wicks up and down are kind of the midpoint of the candle.
Yeah.
You can see the blue line kind of enters the candle right around the midpoint, the trend line. So it probably did close below here. I would probably wait till here. And then you do the exact same thing with the retracement extensions. You're looking for, let's just say that this is the entry, right? So when you're looking for a downside target, you want to go from a low to a high. I'm sorry, I just flipped that on you. From a high to a low to a high so that it projects lower. Yeah. So you want to go from a high to a low to a high, and it projects targets out for you, right? If your entry was this one, you got targets pretty much immediately, right? You got to the 52 bars later. But if the entry was this one, which would have been more like mine, right? Your stop is going to be above the first one that's above the 5. So it's going to be, or above the 21, I'm sorry, the first horizontal GAN line that's above the 21. So here's my candle. Here's the first horizontal line above it. So my stop's going to be somewhere up in here. My targets are going to follow as the 62.5. But then once we hit a close below the 62.5, I don't know if I mentioned this before, and you can use the 61.8 in fibs. If you get a close below the 62.5 on the GAN lines, there's an extremely high probability that I don't want to give numbers out here for compliance reasons, that you're going to get to the 75. And you gapped way lower here on the next day.
Yeah.
So that's a pretty successful trade. And you have the same thing here, okay? You don't get in until it closes below. You draw this sort of best fit. So this is why I do best fits, because I would draw this trend line here, because these wicks were all just high volatile periods after this gap. But this to me is more the trend of the move. It more represents this up move to me than it does this flat wick. It wasn't like a slow gradual up move. It was pretty spiky, and that's why I use best fits for this. So it'd be about here. Here's the first close below, and again, more extensions to the downside without getting anywhere near where your stop would have been.
Yeah.
Now, it doesn't happen every time.
Yeah.
It doesn't. As rotation zones get longer in the tooth, they get weaker, right? On short trades in the equity markets, I generally go 3 or 4, right? If it's the rotation zone, you see spots where it's starting to flatten out like this, it's getting old. On upside equity trades, I'll go 5, and then I'll kind of hold off. That again is on a daily chart. They can be longer than that on an hourly chart because the daily trend isn't finished yet, right? But I can just see visually, like this one here. I actually tightened it up and I shouldn't have. This one here got stopped out here. It didn't get anywhere near its targets. It did get stopped out. And the rotation zone flattened during the stop out. So this is the problem with the shorter term charts. You're going to get more entries and you're going to get more profitable trades, but you're going to have more losses as well. And it's just what happens. You get more signals in shorter term charts. And that's what day traders like, right? I personally don't care about the signals themselves. I'm doing a trade against a pro challenge for one of the big exchanges during this week. I have to hop on that right after this. And this is a period of time. I did a small trade yesterday and I basically scratched it. I made $25 and I have no trades so far today because things have been so volatile. There's not enough price compression for me to take a trade to expand out.
Yeah.
I should be trading because it's a trade against a pro and I'm the pro, right?
Well,
but there's nothing I can trade.
I'm gonna go a little bit of rapid fire here. You're on the SPY. Let's go to the 60 minute or 65 minute. I see a double bottom for Ming. I never said confirmation.
It's okay.
But it's coming back to the support area, in my opinion.
You're correct.
Okay, perfect. So now let's just kind of go rapid fire. The neckline for you is where?
There's no neckline on a double bottom.
Sorry. Wait for it. The
peak?
Man. Peak?
Is right here.
I was gonna say entry level.
This is the peak.
So that's the one for you.
Yeah. Some people would use this prior to these 2 hours. I would have as well, but I would have not. I don't have to measure these 2 because you got those 2 and you can see it's visually within the 25 basis points in one direction or the other. Yeah. But before these 2 candles happened, these might be close. But the fact that, and I've said this on this show before, technical patterns are important. The fact that they're happening is important, but where they're happening is extremely important. Is this at the 200-hour moving average? And here's why I wait for the break, because I don't know how far down this is going to go.
Yeah.
This could go and nullify the pattern before I get out. I don't generally front run doubles.
Yeah, no, I get it. Yeah, we had a
Rapid
couple
fire.
other ones as well. Okay, you have, by the way, I always forget to do. I think I'm just going to start the show with this so that I don't any time forget it. But I do have to put that up there again. The opinions that you have heard and will continue to hear for the next couple of minutes from Bob and I are just that. They are our opinions. Please do your own due diligence. You've got the SpaceX IPO that's coming up.
Yeah.
How would you play that thought process wise? So, for example, some people will take a look at SPCE and just different space related stocks and play it that way. Some people will just be hands off and just watch it. Are you doing anything or do you have thoughts on it at all before we go?
This is mine and mine only. Okay. I bounced it off of Cameron Dawson yesterday in our show with her, and she wouldn't touch it. I've bought Tesla to play the SpaceX IPO. I cannot buy into IPOs. Not that I can't physically do it. There's no data in an IPO's chart. So I have no idea whether it's strong, weak to relative pricing. I have no idea what's happening with it. So I never bought Meta's IPO. I never bought anybody's IPO. I need a reasonable amount of time of trading. And if the price goes to the stratosphere, I just take a smaller position and I'm still fine. So I'm playing it by buying Tesla because I think if this is wildly successful, it's naive to think that the companies won't share IP. It would be illegal, but it's naive to think they won't. And I think at some point the company is just going to be called X, and they're all going to be in there. Tesla's moving away from cars to robots. That I don't think that's great for the stock short term. It's just robo-taxis and robots going forward, and roadsters. And that's it. I don't think that's good, but I think the stock will have a short-term pop if the IPO does well, and I kind of expect it to do well.
Do you think the market, as it's continuing to test the lows here, do you think the market will continue to sell off to buy into the IPO? That's at least the thesis that people have, right? Is that people want a piece of SpaceX, therefore they are selling different stocks to raise capital to buy into SpaceX. You made a
I
face.
guess that's possible. I don't know if I would say that publicly without any evidence of that happening. And some people, some investment advisors may actually know that for a fact. I hear that happening. I really think it's just repricing to Fed expectations more than anything. And again, remember, we still have this conflict going on. We're going on what, 3 months now? That's a headwind. That's a big headwind. So I don't know if that's true or not. I would understand why it would be, but I think it's silly for people to be doing that, to be honest, because if SpaceX, especially if it's tech, because if SpaceX rallies, it's going to become a huge part of the queues, and the queues are going to rally. So you're selling something that's going to gain to buy something that might gain. It just seems weird to me.
All right. Well, I appreciate your insights, folks. Thank you so much for watching, and we will see you next time. See you later, Bob.
Good to see you, bud.